The New Zealand dollar had a very quiet night overnight and remains quite subdued. Over the past 24 hours, it's continued to hover just above 82 cents against the US dollar. Now, in the current economic environment, the economic data isn't very important to the markets. At the moment, market sentiment is very much dominated by what's happening in the Eurozone. And overnight, we saw markets very weak, with equities selling off as ongoing concerns continue to worry investors. In particular, we're seeing lack of political cohesion undermine confidence in the outlook. Expectations of a Greek default remain very elevated despite recent political talks. As a result, investors are continuing to demand safe haven assets, and this has seen the New Zealand dollar remain quite subdued in this environment. The Reserve Bank of New Zealand left the OCR outlook very open at last week's statement. Now, within the statement, the Reserve Bank of New Zealand was actually quite upbeat on the domestic outlook, and it was really just global concerns for the economic and financial outlook stopping the Reserve Bank of New Zealand from increasing the OCR. Now, this week, we get the first read on June quarter economic activity in New Zealand, and we're expecting the GDP growth result to be quite subdued, with growth of just 0.1%, and this is likely to disappoint the market. In addition, it will highlight that while New Zealand's growth has been quite strong over the first quarter of the year, recent data hasn't been quite so robust. It does take some of the urgency off the Reserve Bank of New Zealand to increase the OCR in the current environment. As a result, we do expect the Reserve Bank to feel a lot more comfortable about leaving the OCR unchanged until at least March. The Reserve Bank needs more time to assess what's happening offshore, particularly with what's happening in Eurozone. It's likely that this will take some time to be resolved, and we won't have any clear direction until early next year.